This is still a pricing model. Because you look at what's the risk-free rate, what's the excess return, the process that I'm going through. And so this is a moderately pricey market with risks of interest rates more going up than down, okay?
Millionaire capitalist Ray Dalio famously declared in 2020 that cash is trash. He went on to explain that cash is not secure because it will be taxed by inflation. However, Dalio's perspective on currency has changed over time. Let's examine his perspectives. Cash was formerly a dirty word. Cash is currently quite alluring. In comparison to bonds, it is appealing. In terms of stocks, it's actually appealing. Ray Dalio, the founder of Bridgewater Associates, no longer believes that cash is trash. In actuality, the exact opposite. According to the renowned hedge fund manager in an interview with CNBC, cash has become pretty attractive in comparison to both equities and bonds over the past year. Although bonds may provide investors with a greater income, Dalio noted that the ballooning public sector debt in the US, Europe, and Japan, as well as the negative real yields, have made debt instruments less attractive. This is a significant change from Dalio's remarks from last May, when the market crash in 2022 was just getting started, and he remarked that while cash was still trash, equities were trashier. In October, Dalio tweeted an update saying he had altered his views regarding cash and now saw it as about neutral. Dalio has used the phrase cash is trash numerous times in interviews going back to at least 2019. As a result, it has come to be closely linked with him. Back then, stock and bond prices were boosted by historically low interest rates. In the interview with Cable News, Dalio made some criticisms of Bitcoin, which, like equities, has recovered since the year's beginning. I believe you will witness the emergence of previously unseen coins that will be alluring and successful coins. However, I don't believe Bitcoin is it, he added. A pioneering hedge fund that he grew into the largest in terms of assets under management, Bridgewater Associates, the billionaire recently took a step back from day-to-day management. He adds in a subsequent tweet, at current interest rates and with the Fed reducing its balance sheet, it is now about neutral, neither a very good nor a very bad deal. Or, to put it another way, the current short-term interest rate is approximately correct. Dalio, the founder, co-chief investment officer, and member of the Bridgewater board, seemed unsure about the economy and markets in a note published in LinkedIn in September. While the year-over-year inflation rate will decline, Dalio said that the inflation rate will remain much higher than what the public and the Fed want it to be, that interest rates will rise, other markets will decline, and that the economy will be weaker than anticipated. Before discussing the relationships between inflation, interest rates, markets, and economic growth, and what that means for the future, he made it clear that inflation is where it all begins. In the note, Dalio stated that he anticipates both long and short rates to be between 4.5 and 6%, if the projections and assumptions about inflation and real yields come true. I estimate that a rise in rates from where they are to about 4.5% will produce about a 20% negative impact on equity prices, he said back in September. Since central banks are printing money and keeping interest rates low in reaction to the coronavirus outbreak, Ray Dalio believes that there are better investments to hold than cash. The billionaire investor remarked during a Reddit Ask Me Anything event that while it doesn't fluctuate in value as much as other assets, there is a hefty, negative return associated with it. Therefore, I continue to believe that cash is worthless in comparison to other options, especially ones that will appreciate in value or remain stable during periods of inflation, such as some gold and certain equities. Even though the printing machines are in full swing, Dalio claimed there is now a short squeeze on the US dollar because, for the time being at least, the majority of people utilize it for savings and commerce. He wrote, "Having the world's printing press to produce the world's currency is the equivalent of having the world's most important asset, especially in times when so many people need the world's money," before pointing out that what people value most in the end is health, education, and the ability to take care of family. "I have given money a lot of thought, and I don't think it has any intrinsic value." When questioned about how people are responding to the crisis, Bridgewater Associates billionaire founder stated that he has been shocked and impressed by healthcare professionals, educators, and small business owners. Money in the old days was made of gold, which is physically rare. Gold deposits may be received by banks and paper claims could be made against them. Because building credit is appealing to both lenders and borrowers, and carrying a lot of metal money around is unsafe and inconvenient, Reliable parties emerge who store the hard money in a secure location and issue paper claims on it. Although they first included many kinds of trustworthy organizations, such as Chinese temples, these parties eventually came to be known as banks. Soon, Ray Dalio predicted in The Changing World Order, individuals will treat these paper claims on money as though they were actually money. Given that not everyone would choose to withdraw their gold at once, the banks could issue more paper claims than there was gold on deposit, invest some of the proceeds in less liquid, longer-term assets, and start what has essentially been a multi-century-long game of musical chairs that must continue in order to not collapse. Fractional reserve banking is what this is, and it is practiced globally. The legitimacy of the currency came from the fact that governments could also issue paper money that their economies would utilize on a daily basis, and that was redeemable for a specific amount of gold. Governments, like banks, didn't have to have 100% of their gold reserves on hand, but they did need to keep a respectable amount on hand to prevent widespread redemption attempts by the populace. Because of this, governments had to borrow gold, charge for it, or force banks and citizens to deposit it in exchange for paper claims or currency that were created by the government. All of the main currencies saw relative devaluations against gold throughout the two world wars. Governments created a lot more money than they had gold to back it up. So there were times when they prohibited exchanging it for gold, and other times when it could be exchanged but only for a fraction of what it was worth previously. If you held a paper dollar or paper pound with the expectation that it would be redeemable for a certain amount of gold, they would have unilaterally broken the contract while it was still in use. For the war, people's funds were depleted. Due to more paper claims being made than there was gold in government vaults in the late 1960s, the global monetary system began to collapse once more, and governments once more started to fail on the system. Most nations have been operating on a Fiat standard since 1971, which means that nothing defines or redeems their currency. People use the money that the government issues. Many of these fiat currencies in emerging nations have hyperinflated, but established markets were able to control mild inflation over that time and maintain the usage of their unbacked currencies. Governments are, however, still constrained by outdated regulations regarding how money can be issued, even in this unbacked fiat currency environment. Governments must abide by specific legal restrictions in order to print money or issue debt. Thus, there are checks and balances in place. And this is significant because by allowing governments to create unlimited amounts of money, these regulations prevent them from becoming ineffective banana republics with little legitimacy. Fiat currencies are prevented by the rules from depreciating even more quickly than they currently do. All big spending plans for the federal government must be approved by Congress. The president cannot simply spend as much money as he likes on its behalf. Although it sounds odd, given that they physically manufacture money, the Treasury Department must ensure that there is money available for expenditures before Congress and the president authorize them. However, as they still adhere to outdated regulations that treat money as limited, they are not permitted to simply print more money to pay for their own spending decisions. The debt-to-GDP ratio is the most crucial statistic because it helps us understand how much debt the country has in relation to its capacity to pay off its principal and interest. Do you have the impression that paper money is worthless? If so, why exactly? Comment below with your answer and we'll post it. To receive notifications of new videos, like, share, subscribe, and like if you enjoyed this video. See you soon.